All right, everyone, welcome back. Today we're going to be talking with Tim Grattani about what he looks for to build a watch list. You know, there's so many stocks out there. I mean, again, in 2020, 2021, I mean, we've got this amazing OTC stock run. We've got these epic low float short squeezes. We got cryptos. We got options. There's so much going on out there. Today we're going to be talking with Tim about what he looks for to get down to a manageable number of tickers and setups to watch. All right, everyone, before we get started, be sure to like, share, subscribe, and ring that bell to be notified as soon as we drop a new video. We've got an entire series with Tim Grattani talking about trading tickers, which, by the way, be sure to check out the description below. Click the link. Check out both courses. You know, Tim's got an OG original patterns DVD from 5-6 years ago, and then just recently released Trading Tickers Part 2, which is kind of the evolution of the market. I mean, the cool thing, well, it's a double-edged sword. The market's always changing, but you always got to be learning. So that's really exciting that Trading Tickers 2 is out. So click that link below. So that being said, let's get started. Welcome back, Tim. I am lead trainer with Stocks to Trade. I'm going to be walking you through trying to kind of build this watch list with Tim. So welcome back. Let's get started. What are you looking for tomorrow? What are we looking for a Tim Grattani great setup?
Yeah, so if we want to build my scans and my watch lists, it's honestly not very complicated of scans. I may even run simpler scans than most people. I'm just mainly looking for volatility. That is always the number one thing I care about, whether I'm trying to trade long or trade short. So that's what I build my scans around. I build them around the stock being volatile. So I run 2 scans every night, like I said, and the difference between the 2 is just what exchanges I'm looking at. Okay. So I run this once for OTC stocks. I run it once for listed stocks. So let's start with the listed stocks. The markets I'm going to make sure I have selected, just anything listed. So New York Stock Exchange, Amex, NASDAQ. I want to make sure that I'm looking at those. And then the OTC, BB, OTC markets, those I would just uncheck. I don't want those to come up in my results. So once I know that I'm only looking at listed stocks, the next thing I'm looking at is percent gain on the day. So again, I'm looking for volatility. I'm looking for the most exciting, most volatile. So I have a percent gain on the day greater than or equal to 20%. That is really just my starting point right there. And just one more additional criteria beyond that comes down to liquidity, because I may find a stock that's up 20% on the day that traded almost no volume. And that's useless to me, because if there's no volume, there's no opportunity. I'm going to have a heck of a time getting fills. It's going to be really frustrating. And I also just think lack of volume makes the stock more unpredictable. So I'm going to put in some kind of liquidity criteria. And that usually comes in the form of dollar volume for me. Now, the reason that I'm looking at but dollar volume, the reason I'm looking at dollar volume and not just share volume is because I'm looking at a pretty wide range of stock prices. So, I don't want to say 1 million shares traded, because a 10-cent stock trading 1 million shares really isn't that impressive. Now, the number I use, I actually look for higher liquidity now than I used to. It used to be a $3 million, and let's just go ahead and do 3 million. But now I'm probably more like 5 million, just because I trade larger size and I want even more liquidity. So that it's easier for me to take that size. But we can put 3 million in for this example. But $3 million worth of volume. So that way, if it's a 10-cent stock, that comes out to 30 million shares traded on the day, not just a puny 3 million. So I guess last thing we might want to put in is a price range. I have historically used a price range of unlisted stocks, 10 cents to $15. Now we have had some really bizarre, crazy runners over the last year that has made me raise that number. Stuff like AMC, where it's in the $30 range right now,
or TCAT or BTX or a lot.
It's
nuts. Some of these moves on these, $10, $12.
So I started to get frustrated by seeing these big movers on Twitter, and all of a sudden be like, wait, what is this ticker everyone's talking about? And realize, oh, it's a $25 stock. I missed that because my scan wasn't adequate. So, again, for this example, just so we don't get too overwhelmed with results, let's say $15 maximum, but there's absolutely nothing wrong with raising that maximum price.
And what I would suggest, to those out there following along, what I, ultimately, a couple things, and Tim was probably going to touch on this, ultimately, if you've got that, really, really small account, listen, as amazing as GME is, or Tesla is, it's going to be really difficult to trade those with your $1,000 account. So most of you are probably new. Most of you probably have small accounts. I agree. I think keep it in that, $15 and under range, because at least you can get a couple hundred shares of, and with a, couple $1,000 account or something like that. And ultimately you can nail a call on GME, but if you got 2 shares, it's like, you're not going to move the needle. So.
Yeah. Well, and one thing I will say also is like, I agree completely. Like the higher price stocks most of the time are not going to have the volatility, but this is why I have the 20% gain thing in there, because if a higher price stock is going to pop up, like that volatility will be there. So I have not traded too much lately because of having 2 kids, but I made a trade the other day on AMC. It had a breakout past $20 and I sold it up at 33. So that's over 50% right there. Like, I'll take that any day of the week. But those are few and far between. Keep in mind, like the higher price stocks don't usually get moving like that.
So the cool thing is, and this shows you first of all, it shows you a couple things: the power of stocks to trade. Again, Grittani and I, thanks to freaking coronavirus, I haven't even talked to Grittani in like a year and a half. Mm-hmm. We're doing this video live off the cuff. You see how quickly that was for me just to quickly build out this scan. And keep in mind, here I've got 18 stocks, which is a manageable number. There's, thousands and thousands of stocks that are moving, that are in play, high price, low price, real stocks, true penny stocks. Again, thousandth of a penny stocks that are moving right now, but this gets you down to a manageable number that you can start doing some due diligence on and actually kind of, actually making a trade. If you run a scan and you get hundreds of results, good luck. You're going to spend all night just looking at the charts and seeing what sector they're in. So that being said, I got my 18 results. What do you do now? I'm assuming, I don't want to speak for you, but I'm assuming you want to get down to a, handful of watches, maybe 2, 3, 4, maybe 5 that are your primary. What are you looking for at these, these 18 matches?
Yeah, you're absolutely right. I don't take this 18 and say, well, there's my watch list. The next step is I will start pulling up these charts one by one, and I'm starting by looking at the daily charts. It's always the daily chart that I look at first.
The big chart.
And I'm glad you have them organized like you do right now, where it's highest percent gainer to lowest, because that's the order I'm going to do it in as well. The most volatile to the least volatile.
Yep.
And then it comes down to looking for familiar daily chart patterns, because for me, it all starts with the daily chart. So I'm looking for stocks that are approaching breakouts for a long, or maybe I'm looking for stocks that, had a multi-day breakout today that, might be a gap up tomorrow that I might want to buy for continuation. Or maybe I'm looking for something that is insanely extended after a huge day or 2 of running, and that becomes a top short watch for tomorrow. Maybe either a short into strength on lower highs, or maybe there's an overextended gap down. So it comes down to then just going through the charts one by one and looking for the familiar daily patterns that I want to play. And then I'm prioritizing based off of, what is my favorite pattern. If I'm trying to choose between a few different shorts, maybe then I go into the filings and I say, hey, does one have dilution that the others don't? I might look at share structure, like, market cap type of thing, where, okay, maybe 2 of them are low floats and one of them has, a $500 million market cap. So I probably want to go after the one that's not quite so low float. There's a number of smaller factors that come into play after that to determine, which ones do I prioritize. But a large number of the time, I might pull up a chart of something that's up, 24% on the day. And I say, well, it's not extended enough to short, and the daily chart's nowhere near a breakout. I don't really want to do anything with this. And then I don't even bother putting it on my list. I just ignore it. And the vast majority fall into that category, where I look at the daily chart, I'm not impressed, and I just move on to the next one on the list.
So a lot of you might be like, I'm guessing a lot of you are like, well, okay, what, what am I looking at on the chart? What am I, what do you, and you mentioned a lot of jargon there with your setup names, which I love. Now, keep in mind, this is a 10-minute YouTube video. Check out Trading Tickers. I mean, you can't, I wish we could get Grittani on a 5-minute video and have him explain exactly what a quote unquote good daily chart or a bad daily chart looks like. That's the beauty of the course. Again, they're hours long, extreme detail. Today we're talking watch list. We got you down to 18 stocks, but when it comes to that chart pattern recognition, you got to do the seat time. That's where go below, check out Trading Tickers to learn those patterns.
And just one more thing to add to that, just because it's a pattern for me doesn't mean it's a pattern for you. Like maybe if you're looking at volatile stocks as well, maybe you're looking for something entirely different than I am. Totally fine. I mean, a lot of successful traders succeed doing very different things.
Yeah.
So that's going to come with time. That's going to come with experience. The more you trade, the more you figure out what you like, what you excel at. That's going to make it a lot easier to cherry pick those charts off of this list of 18 stocks and say, oh, this is the one for me.
Beautiful. So let's just to kind of get them whet their appetite a little bit too. Let's what are you looking for on that OTC scan? So we did the listed scan. What are you looking at for again that OTC setup? So
okay, OTC, yeah. And you know what? Let's go ahead and just use the numbers that I used to use back with Trading Tickers as well.
Okay.
Even though I probably have higher numbers now, we'll just cast a little bit wider of a net. So with the OTCs, same sort of thing. Like I go into the markets, I make sure it's just the OTCs selected. All the NASDAQs have been deselected. Now, percent gain on the day, generally I'm going to say 10%. I cast a little bit wider of a net here because the OTCs, like some are crazy volatile, but others, less so. And some approach breakouts a lot slower. So I want to be sure that I kind of see one of those breakout charts as they're developing before the breakout actually happens. So maybe I'll see a chart. Well, we'll get into it later, but maybe I'll see a chart where, the daily chart isn't too exciting now, but I see it approaching a breakout level. And maybe I don't add it to my watch list for tomorrow, but maybe I set a price alert where I say, hey, I see this is the breakout level. Let's just set a price alert right below that. And then, hey, boom, I get a pop-up alert. Right.
And that's a great tip because, a lot of, especially with these OTCs, a lot of what you're doing is you're anticipating, like Grittani said, the reason he's looking at lower percent gains is he's kind of getting ready for a lot of stuff. And that's what's great about whether it be Stocks to Trade or, or whatever platform you're on, you can kind of, you queue these up, you set those alerts, and then they're kind of on autopilot because a lot of these fail, a lot of them kind of creep up and then go away and you never hear from them again. But that's the power of setting alerts is, use the power of the technology. You can have 1,000 alerts set, but you can't physically watch 1,000 stocks. So you take advantage of the technology ultimately.
Oh, absolutely. Yeah. Alerts are such a huge part of my trading, and getting that pop-up when a breakout level's approached and you don't even recognize the ticker anymore is pretty funny.
Oh yeah, I've had alerts like 6 years old. I'm like, whoa, what is this?
Right.
Usually it's a reverse split. Usually that's the only reason the alert goes off is because it's something that died like 6 years ago, and then they do a reverse split and it hits the level. But yeah.
So yeah, we have the 10% minimum gain. Now this one comes down a bit to personal preference, but price range. I personally do not really trade sub penny stocks. I know some people love them and some people do well with them, but it's never been for me. So I've made sure
I can never do the math. That's like the biggest thing, like to me, when like people are trading some thousandth of a penny stock, I'm like, I can't figure out like what a $10,000 position is when it's trading at like 0.0003 cents. I'm like, what do I buy? Like 1 billion shares of this thing? I'm like, I can't even, the math just doesn't work for me.
Yeah, it's tough to think about that for sure. But yeah, I always set a minimum price of a penny.
Okay.
And then maximum price with OTCs. I mean, I've actually had a few OTCs throughout my career that have been really high priced, that have been really well on the short side. So I don't put in a maximum price anymore. Or if I put in a maximum price, it's like 1,000 or 10,000 or something way up there.
Okay.
Just because I don't really want to cap it. And then if we go back into liquidity again, dollar volume, that'd be a big thing for me. And just because I don't want to overwhelm the results today, let's go with a little higher. Let's say $1 million minimum. In the past, I would have probably said 500,000, but $1 million would be good. Just because we don't want to have too long of a list here.
Yep.
The UTC market in the last year has kind of had a resurgence that I did not expect, but it's been great to see.
So again, beauty of that. Listen, there's so many OTCs. You can't even keep track of how many there are. You can see again, simple, really quickly to build. We've got 27 matches, which again, to me is a manageable number. So again, now what are we looking for? Is it similar, same type of idea? You're just kind of flipping through charts.
Yeah. Start pulling up the daily charts, looking for ones that are multiple days of extension to potentially put on watch for a short. Now I'm not going to short a stock that's like 5 cents. Like I don't care if it's up from a penny to 5 cents. I'm not shorting that. Like I'm talking more about ones that are up from like 10 cents to 60 cents or something like that. Like really like the 50 to 60 cent area is about like the bare minimum I'm going to short on OTCs these days. And even that can be pushing it. Like it's going to be really extended for me to get to be interested in that. But yeah, it's pulling up the daily charts. It's seeing, which ones are the most liquid, trading the best volume, which ones are approaching big multi-day breakout levels. Again, like that's still probably one of my favorite patterns to this day is the OTC multi-day breakout.
Especially right now, last 6
months.
Oh my
gosh, yeah. Yeah, that thing's been fire lately. But yeah, so I make sure to put in all kinds of price alerts for OTC multi-day breakouts. But in the case where I am looking through these tickers one by one and I see one that is really, really close, well, then it's just, maybe I'll put an alert, maybe I won't, but it's definitely on my watch list for the coming day. But again, it just comes back to looking at the daily charts and looking for the patterns that I like. And with OTCs, that really is just extension shorts and it's multi-day breakouts. Those are really
now. Speaking of trading tickers, the name of both DVDs. I think, I don't want to speak for you, but that kind of came from OTCs, I believe. Are you really? When it comes to OTCs? Is it just the chart and volume? Do you look at sector? Do you look at fundamentals, or is it just looking for breakouts or overextended stocks?
It's not really fundamentals so much.
Right.
Like I'm not going to go diving into SEC filings with OTCs like I would with a listed stock. But I will consider sector, something like that, where because we really do see
psychedelics, weed stocks,
weed stocks, Bitcoin stocks, and anything. Gosh, I can't even name all the sectors we've seen over the years. But yeah, like I will consider sector a bit, and honestly, like it's going to show up on the results almost always. Like if I run this scan, I'm not going to just see one weed stock and miss all the others. Like they're going to all be running together.
Yeah, and that's the beauty of the scan too. Is that's a lot of people always ask, well, how do you spot the hot sector? And the way I answer is, if you're running these sorts of scans, you got to be an idiot not to recognize what's the hot sector. Because when we really got something that's like really hot, you'll run these scans and like there's 15 EV scan plays, or there's 15 crypto related, it's like, that's the power of this. If you're looking at, and Stocks to Trade has that, you can just see the sector, you can link to their webpage, just kind of see what they're doing. But yeah, if there's a actual, like really hot sector, it'll be painfully obvious on scans.
And while we're talking about sectors, like I will note, like that is probably the one time, or those few times a year where we do have a hot sector. Those are where I'll feel overwhelmed, where I'm like, okay, how do I get this watch list down to just a few stocks?
Right.
And then it does come down to prioritizing, kind of like I talked about the listed, where like the main things I'm going to look at then are like one of the main things I consider is best liquidity, because especially like, the further along you are in your career, the more size you trade.
Yep.
The more liquidity, the more opportunity to get sized in big on like that A+ setup in that sector. So if I get to a point where I'm like, gosh, I have 10 weed stocks and I want to short them all, how do I choose? I'm looking at liquidity. I'm figuring out which ones are up the most percentage wise from their breakout points. Again, it just comes down to a multitude of little factors, and maybe that's just my personal preference. But again, sort of going along with the listed stock thoughts, like that's something I think that any trader can figure out as their career goes along, like what kind of things they like best and how to prioritize that.
Fair enough. Well, again, to everyone out there, I mean, I know, again, this is quick. It's YouTube. Everybody has a short attention span. I mean, I always remember, like, I remember it used to be like 20 minutes, then it went to like 15, then it went to 10. Now they're always like, you got to keep your YouTube videos at like 7 minutes, which I think we're way over. But that being said, what we're trying to show you here is, you know, that kind of that keep it simple, stupid methodology. I mean, again, obviously stocks to trade is one of the best ways to do it. You can see how quickly, and again, we didn't plan this. Grittani just talked me through it. 3 clicks, I got us down to 18 on the listed. I got us down to 27. If we spent the time, probably would get that down to 5 on each or in that area based on the chart, based on the fundamentals, based on the sector, etc. But run those scans, look at that, research it, spend that time. And again, the best way to know how to get from 18 or 27 down to number 1. I mean, you know, listen, if you're under the PDT, you can only day trade a few times a week. You have to be selective. If you're, you know, if you got a small account, you got to be disciplined. You got to focus on the best setups. If you're part-time, which most of you probably are, you can't be sitting at the screens all day long. You need a process. Trading tickers and trading tickers too, I think, are one of the best ways to do that. You can watch them at your leisure. You watch them at night, watch them at work. You know, hey, we all know you're not doing anything when you're working from home anyway. You're just pretending like you're working. I know, I've seen it. But anyway, check out trading tickers and trading tickers too, and check out Stocks to Trade. Built-in scans. We've got some custom scans coming from some of the top traders out there. We've already got 40 plus scans built by Tim Sykes. We're actually going to have criteria from the Grittanis, from the Jack Kellogg's, from me, from Matt Monaco, all these guys out there with different approaches built into the software. But when it comes to recognizing a good chart, spotting that breakout or that breakdown, check out Trading Tickers and Trading Tickers too. And as always, thank you, Tim Grittani. Thanks for coming back.